The housing market has kicked off the spring season with a bit of a jolt. Competition is back in many locales of the GTHA, and fixed-rate mortgages could start to drop. For a look at what's taking shape in the real estate market, we're joined by Toronto Regional Real Estate Boards, or TREB's president, Paul Barron. Good morning to you, Paul.
Good morning.
We're looking at March. What are some of the key indicators from that month that we should be caring about and you're looking at quite closely?
For sure. So obviously competition is heating up in the GTA, and recent consumer polling suggests that the demand for home ownership will continue to recover this year.
Well, that kind of sounds positive, but what does that mean for home buyers, for the consumer in general?
Well, it means that the interest rates are starting to come down with the competition out there, and it just means that there's more buyers coming into the market. In fact, in March was the first time since May of last year that the selling price was above the list price in the GTA. So that's obviously a sign that things are starting to heat up.
Yeah, so taking a good sample of what's going on out there kind of helps you predict what's going to happen next. So according to you and Trav, what's the future, at least the immediate future, looking like for home buyers?
Yeah, so I think that the rental market plays a big role in that as well. You know, a lot of first-time buyers are really having a challenge with the high rents that are out there. And it's really causing a lot of first-time buyers to say, hey, you know, the idea of is it better to buy or rent, with rent so high, it's looking like more people are trying to get into that housing market, and they're just sick of paying these high rents.
Yeah, a lot of people have been sitting on the sidelines for quite a while with such low inventory. Do these kind of indicators feel to you like things are getting a bit of a shakeup and are going to get a lot busier?
Yeah, for sure. And the biggest challenge is the supply. You know, we need more purpose-built rentals. We need the government to enact some of these policies that they've talked about, because supply is always been the issue for the last many years, and it hasn't changed now. You know, we definitely need to look at builders putting more product on the market to accommodate the huge demand that's out there.
Yeah, and providing that supply, like you've mentioned many times over, isn't something that can happen tomorrow. They put in the policies, but it's still, to get these homes built at such a rate for the demand of people moving into Toronto, that supply shortage really putting an upward pressure on prices for people. So does that mean they should get in now, or kind of keep watching you and the indicators?
Yeah, so I think that the idea is that it is probably better to get in now. When we look at the bond market and we look at where interest rates are heading, obviously we've got a Bank of Canada rate release today. I'm thinking that they're going to hold steady on that. But I think that the financial challenges with some of the banks in the States are going to put a halt on that. And already a lot of the lenders are starting to price that in and are offering a lot more discounted rates. So right now prices are, fairly reasonable. Yeah. And if rates continue to go lower and you lock in your purchase now, I think you're going to be ahead of the game.
All right, Paul Barron, thank you so much for your insights. We can always lean on TREB to give us the information we need when it comes to the housing market.